Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live. Good morning, everyone. Welcome back to another Monday live stream. I hope you're doing well. Hope you're trading safe. And dollar index is down this morning. Talk a little bit about that. Talk about what's going on in the indices. We see some push to the upside. Remember to check out our sponsor today. If you want to get funded this year, it might be worth checking out DNA Funded. They are offering 20% off to stream viewers with promo code A1T20. So don't miss your chance to get discounts on their challenges. They have a bunch of exciting new things that they're launching. I think they've got like instant funding and all sorts of different products available. So check them out down below in the description or in the live stream chat. There will be all the information you need to check them out. Hope everybody's doing well. Again, new week and a big week at that. We have some really critical stuff happening here this week with the FOMC. Are we going to cut 25 basis points or 50 basis points? Of course, the bigger cut would lead to probably some weaker dollar index moves, as well as a pump for stocks. And a 25 basis point cut, I think, is what the market is currently expecting. Very likely that is what you are ultimately going to get when it comes to this week. We'll see, though. The dollar index is moving lower, continuing its downtrend. We've been in the camp here on this channel of staying bearish on the dollar. A lot of weakness in the data, which has made it really not super attractive to me in terms of a long side action. In fact, most of this year has been just a wash for dollar bulls. The long story short, right? The big picture is the labor data really weakening is a tough story to really get super bullish on the dollar. You know, because if you're looking at the labor data and it is just sinking, the challenge with that is that's going to get the Fed's attention and that's going to force them to cut interest rates, right? The Fed is in, okay, we need to cut rates mode. And we see that very negatively impacting both stocks and the dollar. Well, I should take that back. The dollar is negatively impacted it. We can already see dollar index is trending lower. Metals are ripping higher. But stocks have yet to materialize any of this macro uncertainty, which I think that they will. Not today. Stock markets are back to those highs, but I think that there is a serious potential that you could actually see a sell the news event. What I mean by that specifically is the rumor has been, hey, the Fed's going to cut. The Fed's going to cut. It's going to be great. I think that the fact, sell the news, sell the fact, that expression, historically, believe it or not, rate cuts, post rate cuts, there are many instances historically where the Fed starts cutting interest rates and it actually sends stocks and metals lower. We could get into the metals component, which is more complicated there, but for stocks, it actually kind of makes sense. If you think about it, the Fed typically cuts rates. Why does the Fed typically cut interest rates? Well, most of the time, the reason the Fed cuts interest rates is because the data says, hey, we need interest rate cuts. That right there tells me, okay, if you've got a situation in which the Fed's saying, oh, we need to cut because we need to help the jobs market, what happens is, in my opinion, you have a risk that, okay, the Fed's going to start interest rate cuts, and then the market is going to say, all right, great, we're getting our rate cuts, but why are we getting rate cuts? Oh, we're getting rate cuts because the economy is weakening. That is my opinion about it, as I think that you could get an event where you see a buy the rumor, kind of like, hey, the Fed's going to cut, and you get all these kind of hyped up moves. And then reality kind of settles in. And I think that people are going to say, hey, look, the macro looks like we're struggling. Looks like the economy needed those rate cuts, not necessarily because it's just, that's the camp of, there's two camps in this rate cut thing. It's, hey, we're cutting rates because, the economy's fine. We could just use a little bit of help. And then there's other people, more so on my side, who are like, hey, you know what? The economy is actually showing some real weakness here. And rate cuts are needed. It's not a want, it's a need for rate cuts, right? I think that the Fed is looking at this data and saying, okay, yeah, we gotta cut rates. And so if they have a need to cut interest rates, to me, that is less attractive of a story for stocks. Now, I know I'm coming across pretty bearish here, and it's because I do think that the market is due for a pullback. But the problem is, if you've been watching, I've been saying that for like 2 months now. So by no means have I been shorting or trying to call that this market is going to top, that it's going to sell off, it's going to roll over. So understand, I'm not making a bet here either that the stock market has to roll over. But I do think that you are sitting at a pretty good opportunity for the market to pull back, because you have this environment where, okay, why are we cutting rates? Labor market's weakening. So I made this other point though. Why would metals also potentially come down with it? Well, if you actually get a shock to the system where people start to worry about recession or worry about true slowdown in the economy, what interestingly happens is that you get, if you were to get a broader sell in markets, more of a risk-off move, what can happen, especially in sharp market drops, if you were to get them, for example, is metals actually can get sold simply so that liquidity can be raised for, or cash can be raised for companies that are, or hedge funds, et cetera, that perhaps need to do so, like leveraged funds, all these sort of institutions that may have leverage on the table. If the market drops substantially, and suddenly they have to kind of ante up cash reserves, a lot of times that's where gold can kind of get sold too. So let me show you that. Let's go back to, for example, 2020 is a really good example of what kind of can happen with gold. So you have a shock to the system and everything gets sold. Here is March of 2020, shock to the system, gold prices, because recession fears spiked dramatically. You had a 15% drop in the price of gold. Now, that was much more of a shallow dip than it was in stocks and indices, and gold proceeded to rally harder than indices did for a little bit there. Eventually, indices did catch up with all the money printing and kind of the stimulus. Stocks went crazy in 2021. But what I think is important for us to remember is that typically, if you are getting some sort of like significant sell across the board, gold and silver typically do also get sold too. So understand that gold and silver, in the event that you do get some sort of liquidation event, some significant selling, if you were to get that, it would likely also mean gold and silver move lower. But those dips, in my opinion, would be more attractive. Now, again, I'm not saying that I think, everything's going to tank tomorrow. I'm just saying that you have to understand that gold and silver are a store of wealth. Remember that if markets fall out of the skies, they got to grab their store of wealth and use it, right? So that means sell their wealth. So in 2008, for example, if we go longer term, right? 2008, you had a pretty substantial sell-off in the price of gold at the time. So you can see here's 2008, right? So, oh my gosh, the world's going to fall apart. There was a 34% drop on gold, which is big. Gold doesn't move that much compared to stocks, I suppose, in percentage form, right? So to have a 34% drop in gold was pretty substantial. Now, from there, the market ripped and ripped and ripped. I would not be surprised if we see something similar in the gold and silver market. Not necessarily, again, I'm not saying this is happening this week or anything. I mean, you could get an event where the Fed cuts interest rates. And it depends really what Powell says this week, really. But if you get some sort of market reaction where people are fearful, yes, gold and silver prices could drop. But my opinion would be those dips would be great dip buying opportunities. Not financial advice. That's what I'm thinking. So if I were to see gold prices make a move back down to this 34.25 level, or even the bottom end of this range, I mean, I think that the bigger picture, those would be buy the dip opportunities. From a trading perspective, I like the 38.2%, looking for a bounce there. If you were to get a pullback here, this would also be an area where I could look to get long around 34.25. But again, I know I'm talking a little historically on metals. I'm not looking to short them. I am still long SLV. I'm long silver. I don't have any gold positions, but would be potentially willing to pick up some gold positions if you saw a market pullback. I think something else interesting that I saw on metals that is worth bringing to our attention here today is if you take a look at some market sentiment, look to put to call. So this is options flow for gold traders. They went really high on the put demand last week. I thought that was really interesting. So you actually have crowd sentiment, believe it or not, betting against gold here, at least on the options exchange. So I think the crowd thinks, hey, gold's overbought, it's got to come down. And that actually, to me, signals you might get a further pump just to, how the market can be, right? When everybody thinks, hey, it's going to come down, that's when it just flies through. So I wouldn't be surprised if gold and silver continue their melt up. I am by no means saying that I'm short selling or closing. Look, I am still long silver. I don't know where we're going to go for certain in the next few days. This is one of the better trades that I've had this year. And my plan is when I have one of these types of trades on the table, my job is just to not mess it up. Specifically, what I mean by that is many times when you get these pops, right, it's very natural to be like, oh, I should close it. I should close a piece of it. I should take profits here. I don't want to give back my gains. It's a very natural feeling, I think. In fact, one of the most eye-opening things that I have done over the years is I've asked my audience, and can I ask you guys to weigh in on this too? Do you struggle? I'll give you one. Just give me a 1 or 2, okay? 1 or 2. Holding on to winners or holding on to losers. Which one of these is harder for you? Give me a 1 or a 2 in the chat. Just type 1 or type 2. Do you find 1, holding on to winners harder, or 2, holding on to losers? OT says 5. OT, I think you might be on another planet right now, my friend. The options were 1 and 2, and you gave me 5. Okay, so 1 is, yeah, 1 is, everybody's saying, mostly people saying 1 in the chat. Of course, everyone's a little bit different, but I would totally agree with 1. Holding on to winners was something that took me a long time to truly embrace and learn. Holding on to winners is difficult as human beings. Why? Because in our minds, we're like, let me take that profit before I lose it, right? That's a really natural feeling, I think. But what I found is, like, the more I back tested, the more, what I found is that with my style of trading, where I am a momentum trader, momentum and trend following is oftentimes really humbling, because what I mean by that is that if I'm long gold or silver, my natural technical analysis, my approach to markets would have told me, like, oh, take profits there, or like, oh my gosh, this is getting way too stretched, take a profit, right? That's what my brain tells me to do. But what makes markets so wild is that sometimes, and I never know exactly when, sometimes you get these types of astronomical moves that just don't want to stop. And you think to yourself, you say, that chart looks high. Naturally, the next thing is for it to go down, right? That's what we as humans, I think, tend to do. And so we start telling ourselves, I got to take my winner off the table. Things going to pull back. Things going to sell off. It's going to crash, right? If it's up, it's got to crash. If it's down, it's got to rally. We do that, I think, in our head sometimes. And what I have come to realize in my trading is that trend following, right? We all want to be trend followers. Everybody says, oh, I follow the trend. Do you really? Do you really follow the trend? Do you know what following means? Following means you're not leading it. You're not trying to say, oh, I'm going to take some here. I'm going to take profits here. I'm going to take profits here. It's hitting resistance. That's you trying to lead the trend. Following the trend means you lag the trend. Let me give you a really simple visual example. Let's say you put a moving average on this. Let's say that let me change this to let's just say we do a 20 moving average. I'm going to change it to a color you guys can see a little easier. Let's make it thick. All right. So trend following means that you go long here. Let's say you bought this breakout, right? Trend following means when this like, here's an example of a simple trend. When this thing closes below, you close out. So you close out right there, right? So trend following means you're not taking profits when the trend is going in your favor. You're taking profits when the trend is no longer going in your favor, right? The trend is your friend until the end. That's the old expression in markets. Or the trend is your friend until the bend, or there's a couple different variations. But the point is, right, trend following means, look, I don't know if it's going to keep going up. I think, I think in my head, I'm like, oh, I should take a profit. But what I found over the years of doing this is that I found more success in just letting the market tell me when it is time to get out. That is why I love trailing stops. It's a very passive process. It's not always fun. Trust me. Trailing stops stink sometimes, because sometimes, let's say you get long, let's say you wait for the pullback, you get in, and then, you have a great move in your favor. So you trail stops from here to here, and then the market does this. That is not fun, but it's part of trailing stops. There's nothing that is perfect in markets. I personally my poison I have chosen is trailing stops. It has pros, it has cons, just like every other exit style. If you take partials, great. By the time you hold on to that little piece at the end, it has an explosive move in your favor, you gave up a ton of the gains because you took partials along the way. If you take profits quickly, great. You missed on the huge up move. If you get the one big runner, you just took the tiny sliver of that move. If you have a massive reward relative to risk, like if you have a 10R versus 1, you're going to lose a lot of trades before you catch the big one. The reason trading is hard is because there's no easy, all-inclusive way to know what the market's going to do, and best exit strategy is going to make you tons of money all the time. It just doesn't exist. You got to pick your poison. For me, trailing stops is my method, and it looks great when I have these types of trades. It doesn't always look this great. Anyways, my job, though, getting back to what I say often about this stuff, is when I'm trailing stops, my job is to stay with this trade until it tells me it's time to leave it. And I've marked my level of support here. If price comes down and we fail to hold it, I'm out. That does mean I give up all these gains here. I've got all these gains here piled in, but I run that risk. I'm constantly saying when I'm trailing stops, I'm always going to end up taking lesser than my maximum potential, right? Because I'm not trying to call the top. When the market breaks support, I'm out. But I thought this was interesting. Metals put to call ratio kind of went crazy on gold. Silver, not so much. Silver still kind of in neutral camp here. So let's take a look at some S&P 500 though. S&P 500 still sort of in neutral sentiment. Matches up nicely with the investor sentiment survey. Actually, I take that back. Investor sentiment survey is still bearish, which to me tells me that you still could get, in fact, I think this is what you're seeing. You still have a lot of people on the sidelines of the stock market who are sort of bearish, right? You have a lot of people who are still bearish on this market. And I think that's part of the reason it keeps melting up, is because people are sort of throwing in the towel and buying, just saying, hey, it just goes up, and now they're chasing. So I think that you still have this cohort of bearish people. And look, I am pretty bearish. I mean, I should say neutral to cautious. Like, I'm not shorting, but I have a little bit of a negative outlook on the stock market, simply because I think, again, the macro is worrisome, but that does not mean short. There is a difference between being cautious and being short. What about Bitcoin? Yeah, Bitcoin, I don't really have a strong opinion on, to be completely honest. I think that if risk assets, like I think with stock markets, move lower, I think Bitcoin also could move lower, but I don't really have a strong bias there. If I go to my top setups page, let me see what I've got here in terms of to-do list today, possible new trades. The Australian dollar, I want to check in on that one. Chinese stocks, dollar CAD, gold. I'm already looking for bullish setups on this one. I don't have a trade on. I have silver longs, euro dollar, pound dollar, and oil prices on the bearish side. Let's look at oil prices, actually. I want to take a quick look at oil. So oil prices, if we get a little bit of a rally in oil prices, to me, this would be a potential short setup. I may try to get short again. I tried a previously short position, took a loss on it. Yeah, I'll have to look at oil, see if there's something there. I don't love the idea of, yeah, I mean, I think I could, let's see, -5 score, sentiment score. I'd like to just take a quick look at the put to call ratio. What are people feeling crowd sentiment wise? Put to call ratio. US oil. Okay, so there's a lot of calls out there on oil prices. Very interesting. So oil demand is pretty strong on the options exchange, at least. Very interesting. So, yeah, oil prices I'll keep an eye on. If I take that short, I'll share it in the Discord. Let's see. What else? Pound dollar, euro dollar. By the way, guys, if you want to keep up with some of my trade ideas, I do share them also in our Telegram channel for free. If you're interested in joining that, we can drop the link here in the chat. If you want to join us there, actually, I highly recommend you join us there, because if you are not in there, we do like giveaways in there. We're planning to do some giveaways. Those will be announced in the Telegram channel. Like I said, completely free to join. Click the link there in the chat if you are interested in that. But again, we do giveaways in there, give away Edge Finder copies, VIP signals, memberships, etc. In the Telegram channel, we'll be doing some of those in the coming weeks. And yeah, take a second. If you don't have it already, there's your chance. Grab it. Join the Telegram. Pound dollar and euro dollar back towards the highs. Well, I should say euro dollar back towards the highs. Let me look at, so euro dollar is getting a +5 score. Economic data for both pound and euro is favored over the US. Let's see. Sentiment score. Like, if I'm taking my pick of the two, it's probably going to be euro dollar. euro dollar on a break through the highs would be interesting if you were to see this kind of move. I mentioned this earlier, the Australian dollar's been on my watch list. Let me pull that one up. Yeah, so if we get a pullback into this area, this one looks interesting for me on the daily chart. The Australian dollar, a more relatively hawkish central bank compared to the U.S., who I think is going to be dovish this week. I think Powell's going to be pretty dovish. We probably will get a 25 basis point cut, but I wouldn't be surprised if he continues to suggest that the labor market data has accelerated to the downside, so that is the bigger risk of the two between inflation and jobs. That's my guess. It's my best educated guess this week. And I think stocks are partially up because of that. They're saying, hey, the Fed's going to cut rates. It's going to be great. And my worry is that, yes, the Fed's going to cut rates, but the question is it because the economy is really showing some signs of weakness? And I think it is. So we'll see. Do you think gold will revisit 3,500? 3,500 is down here. It could. I wouldn't play for that, right? I've had some people asking me those sorts of questions, like, do you think gold will pull back to XYZ? Do you think gold will sell? Like, when do you think gold will pull back? And I just want to reiterate that I don't think it will pull back. So my base case, and this is important, right? Because we never know what's going to happen. Like, I could see gold prices pulling back, but my base case, where I think if I had to choose a direction for where gold prices are going in the next week, fortunately, I don't have to per se, but if I did, my base case is going to look like something like this, right? So people are, frequently ask, like, is it going to sell this week? Is it going to sell in the next 2 days? We're going to pull back to this level? And I'm like, maybe, but I'm still going to the thing is, markets are not so predictable. We could see any of these, like all of these scenarios that you're seeing on my drawing here are things that I can see happening for gold. All I know with my strategy is what the macro tends to look like. And I base my decision making off that. So I don't know exactly what gold prices are going to do. And I never know exactly what any price is going to do exactly. I just have a base case or a macro based approach. And I say this so frequently on my segments here on the show. So often people heavily value technical analysis, and I use technical analysis, but it is a very small component. In my opinion, I don't think technical analysis has a tremendous amount of predicting power like retail traders tend to think it does. Like, most retail traders think that if I draw up good levels and I mark up my chart really good, I'm going to figure out what the charts are going to do next, which I think is just kind of a lot of energy for not a lot of gain. I don't think technicals give you a huge edge in terms of spotting what the chart is going to do. It's kind of like reading tea leaves or reading someone's, what is the astronomy signals or signs, whatever, right? Like you can really read into those things, and it doesn't necessarily perfectly predict anything. Astrology, that's the word I was looking for. So to me, technical analysis, is it useless? Absolutely not. You can see my charts are marked up. I use charts, but I think I say this so frequently because I genuinely believe this is the case. Retail traders tend to overvalue technical analysis and undervalue fundamental analysis. Now, granted, take that with a grain of salt, because I sell a software that helps people scan fundamental analysis. So it's easy to write me off and say, well, Nick, you're saying that because you sell something that's related to fundamental analysis. So of course you're going to say that. That's fair. But what I would say in response to that, you can clearly see I have a lot of conversations by myself here. But what I would say to that is that I've posted my public trading results for a reason. It's because what I do and what I've built a system around, it does work. It has worked for me for years. I've been doing this for a long time. I've been able to become a consistently profitable trader, and very little of it, guys, had to do with technical analysis. Technical analysis it has a place, but people make it their whole world in trading, where I think it should probably make up like 15% of what we do. That's my opinion. It's like palm reading. Yeah. Like you can like stare at the 5-minute candle and start telling yourself stories all day long. Does it give you any predictive power of what it's going to do next? I mean, it's debatable, but I would say that the bigger theme, remember when I just showed you all those pretty drawings, these pretty drawings, that directional bias, that dotted yellow line, that kind of line of best fit, the average expectation for where the markets are going to go next is not based on technicals. Maybe a little sliver of it is, right? Momentum. Which way is the chart moving? Okay, true. But which way is the data telling us it's going to likely go? That is what most retail traders ignore. And I say this, this is my spiel, right? This is my rant. This is talking my book, as they say. When you turn on CNBC, when you turn on, podcasts of fund managers and great traders of history, what you will find is people who have been very successful. They manage tons of money for people. They typically are talking about what the Fed's doing, the business cycle, the economy, inflation, jobs, growth. That's what they're talking about. So if the professionals are doing a certain thing, why would you try to do it like the YouTube guru traders tell you to do it? And again, don't listen to me. Like, I'm a YouTuber trader, right? Don't take my word for it. Go listen to CNBC, go listen to professional fund managers and expert traders of history that have proven results, that have managed money on behalf of people. I say manage money because that's a very transparent way to see someone's trading performance. If you managed money for, $1 billion worth of clients, then yes, you have a public track record like no other. And so those people talk about the Fed. They talk about the economy. They talk about inflation expectations. You see what I'm saying? Do not take my word for it. I'm just a guy on YouTube. Listen to the pros, the true pros. Like I am a professional trader. I wouldn't consider myself the greatest of all time by any means. I'm a good trader. I've made money in the markets. I've done really well for myself through the markets. But if you want to talk about the true, like, Michael Jordans of the trading industry, it's going to be people who manage tons of money. And you know what? They talk about fundamental analysis. Fundamentals are for direction. Technical analysis helps to spot entries and exits and stop loss placements, things like that. Right? So very, very important to understand that technical analysis has its place. Many people tend to overvalue it because it is what is simple and easy for the average person to get involved in. Fundamentals are scary to people, and there's a learning curve and there's a barrier to entry, and that's why the pros do it and the retail traders tend not to. That's my opinion. It's much harder to learn. There's a lot more to learn to it. So again, yes, I sell a product in the space around fundamental analysis, but it's because people who want to tap into fundamentals lack the tools or abilities to track all this data. That is where we as a company have filled that need and why we have traders who use our products. So, by the way, if you're interested, I mentioned this earlier, if you want to join our free Telegram channel, we're going to drop the link here in the chat. We're going to be sharing more public trading ideas, chart markups, fundamental analysis, the best free way to learn. If you're like, okay, tell me more about this fundamentals, how do I get started? Simplest way in the world to start learning is to read our daily publications about fundamental analysis in today's markets. We have an expert trader and content writer sharing content in there every single day, giving a debrief about what's happening in markets on our team. So there's your chance to get started with fundamentals for free. You don't have to pay a dime. You can just come in there and read the daily fundamental analysis that we're doing, and it might be useful to you. So there it is. We're also doing some giveaways, and the giveaways will be done in the Telegram channel. So make sure to join in there. Okay, guys, up next, we have our very own Ivan FX taking over for a little bit, talking about markets and what he is watching. If you're also interested in coaching, stick around. Ivan might be the right person for you. If you're looking for one-on-one coaching, we get those requests sometimes. I don't personally do one-on-one coaching, but Ivan does, and he does it at a great rate. And he also is a very experienced trader with years and years of experience, as well as an expert ability in helping people specifically with unlocking the things that are holding them back in their trading, which often is trading psychology, and as well as building a system and actually following and building, testing, and sticking to a system. So stick around. Ivan FX just after this quick break. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Now, the question that came just in now says, Marco, how will the rate cut affect the market, other markets, like the DAX or the Nikkei? The real answer is, how do we know? How can we know? And you would always see what does other markets do when dollar does A or they do B. So when dollar generally are falling like they do now, and you take a look at, for example, as you mentioned, the DAX 40, it is it's supposed to be having like a more of a bias to the upside, and the reason why it's falling down might be that Fitch downgraded the French debt and their ability to pay. So that is definitely a bearishness. But on the other side, if you take Nikkei, as you mentioned, a more bearish dollar in general, with a company with great economics out of Japan, should in general send this one higher. So my mantra whenever I trade or whenever I look is always, whatever dollar does, everything else does opposite almost. S&P goes higher, Aussie goes higher, the currency, and then of course against the dollar, euro goes higher, pound goes higher, New Zealand goes higher, because the way I look at the market, might be wrong, might be right, but the way I look at the market, we are always at a peak. We always like the 100% of the market is always there. There is generally not a lot of influx on a day-to-day basis in and out of the market. It's kind of a constant. And when you see dollar weakness, for that matter, we can go down to dollar weakness. We see dollar weakness here. We see Aussie strength, but Australian dollar, the Australian economy is not doing that great. They have very low inflation. Okay. What about New Zealand then? Is also higher, but they're also cutting. They're double cutting. Like, what's going on here? It is, and then if for that matter, take euro, it's also going higher. Well, euro is in a better position. We are more likely to start hiking in euro more than cutting, because they have kind of found their floor. They're not really going to cut anymore. They might see a rebound in their economy. So dollar down, everything else up, and not necessarily because their own economy is so strong, but it's that it's opposite the dollar. And whenever you sell something, you have to buy something and somewhere immediately. Because when you take your trade, it's not like you're want to execute now and then tomorrow, oh, you get filled. No, it's instant. So it has to go into some other assets. And another asset that really has been favored in this sorry, BTC was not the one, in this dollar bearish scenario, is gold. And I have said this before, and I'm saying it again, is that gold is driven higher by lower $1, but lower interest rate expectations out of America. That has really set fire, and especially since 1st of August. It's 1st of August is here. What happened then? Low NFP numbers. Comes over to September, again lower NFP numbers, and then they revised down the June NFP to negative and revised up the July number, but August was still very weak. that kind of set things on fire, because again, that would lead to a rate cut. So how will other markets be affected by dollar and its rate cut? You have to, one, it's not a 1-to-1 ratio. You have to look at their own economy and that strength or weakness compared also for DAX and for their indices. But if on a general scale, say dollar weakness, everything else strong, and then you start making individual comparisons, because pound versus the Australian dollar, pound would be much stronger and rise much more and be more volatile than the Australian dollar, but it doesn't have so much deep pullbacks as the pound does. So if you look previously for the past week, for that matter, we have quite a deep pullback on 94 pips, but Aussie never had those deep pullbacks. At the same time, it just had a 34 pip pullback. So that, if that makes sense, that is great. My name is Ivan. Been trading for plus 10 years. I'm out here trying to make it. Sometimes I do, sometimes I not. I am not really happy today, more than anything else, because I didn't have internet yesterday to do our weekly planning meeting. But 15th of September says in my book, buy yen pairs. And I saw this morning when I finally got the internet back, we made a higher high, or tried to make a higher high in euro, tried to make a high, tried at least when I looked earlier on Aussie, and then pound also made higher. There is one problem with my entire story on the yen, and that might take you out and say, hey, that is not for me. It is the rate hike story. And when we say hike and we say cuts, how do you know that? Somebody asked me that the other day. Investing Live, SEB, and I think getting out of the Bloomberg for those who have that. Every single day, every new news information makes the market take a bet on either side or whatever, and that changes the bond market. And this is where this is re-engineered from. And in their next Fed meeting, market has priced in a 92% probability. We can go to the Fed Watch tool for that, for a rate cut in their next meeting. Okay. And then ECB, no change. Bank of England, no change. Bank of Canada, 90% cut probability. RBA, no change. And 82% for a cut from New Zealand, as I mentioned. Nothing from Swiss National Bank. But then Bank of Japan, mark is pricing in somewhere in December, January 2026, that we're going to have a rate hike. Now, that leads me to the problem, because the Bank of Japan has been waiting for wage growth, and they got it 1 or 2 Fridays ago. So what else are they waiting for? I don't know. Higher GDP? They got it. They have higher inflation. So when that starts being priced in, especially with dollar weakness, yen might strengthen quite considerably, and that is the risk to my dollar. So yen bearish at the moment. But regardless, last week I have previously been offering 1-to-1 1-hour sessions for free. For those who are in Discord, you have my link there. And Nick mentioned that I really love to talk to you guys, the students, and when I came across one meeting last week, it touched me, because the person that I was talking to was losing. It didn't matter what the person did, losing. Whatever the person did, wants to give up almost. And then I'm like, yes, this is the time. Now is the time to build. Because the questions that I get in these meetings is, oh, can I add money to my trading account? I'm like, I can't tell you that. That's not my business. I can't. But what can you help with? Okay, what is your story? What is your trading strategy? What is your results? How do you trade? How is your process? How do you think? And all of a sudden, we start coming into why you're not profitable and what makes you profitable. And half the times in these meetings, and even for myself, sometimes you're wondering, why do you keep making the same mistakes? You know that you shouldn't be buying or selling at those levels that we have been looking at lately. For example, not in particularly, but one story was that the person bought gold. The person saw gold rising some time ago. It was about 8th of September or so. Saw gold rising on the lower time frames. Went out, came back, and everything was erased. But then my question to you: did you follow your rules? No, the market was moving. It was a lot of, again. I think in that amount it was half of the account. Okay, but why do we keep doing this? This isn't what you're supposed to be doing. We're supposed to be calculated moves that has some kind of history that we know in this situation we're going to make money. Because if you continuously to either bend or completely disregard your rules, how can we then measure? How can we then say that you're successful? Are you then successful at randomness? Are you then successful at picking the market and say, if you buy right now, would probably be such a case because the market moved and that person would be, yes, this is great, this is a great time. And every time the person comes back is either back in loss or break even. What are we doing? So that's where I come in, and I try to create some rules and some structure and say, this is what you should do in terms of look at your strategy, look at your statistics. What have you done before? What works? What doesn't? Are you following the trend? At least what we're trying to do. Are you looking at the fundamentals? Most likely not. In most cases, because it's difficult, and that's totally understandable. But what I generally say then in, what does inflation expectations say? What does inflation say? What is currently inflation? Start there on dollar and then move out and say, okay, every time dollar seems to have a trend in inflation, look at what dollar does. When it went from 2 to 9, from 9 to 3 or so, 2 point something. Okay. What happens in between there? Start building your strategy based upon historical data that will tell you, okay, what have we previously done and what are we currently doing? Are the drivers still the same? And basically, I'm coming down to what drives the market. Why does gold go higher right now? Why does it have a candle higher? And why is it not going to be pushed down from this resistance level? Why is it supposed to go higher? And the why is always what's going to set your trading free. The rate is already priced in. Yeah. So because we had a discussion earlier with Lee in Discord, and he said it's not really into fundamentals. It's just a discussion in the trading chat in Discord that what about pricing and how does that work? And the pricing of rate cuts or rate hikes or whatever, it happens in the now. For the rate cuts for now for Fed happened in 1st of August. Then it went from, like, let's say, what, 50 or so to 90 or 60 to 90, something in that direction. Like, it went from we're not really sure until we actually sure. And then it fell down a bit, and then now we have another NFP coming out even weaker than the previous, almost with revisions lower than for the previous numbers. Remember, the June number went from 147 reported down to 14. The revised down to 14, revised down to negative 13. So just mention that. How much do you actually... okay, that is a question for none of me. This one? This is so that you... okay. No, it's not. That's that one. Okay, so it's about drawings, and I think it is when you make one drawing, it connects, and then it doesn't, and then this one, yeah. So I'm not too sure actually about that one actually, because yeah, but I'm not too sure about it. I have to be. Okay, so it's about syncing. Syncing with your layouts. So if you want it to be synced or not, probably. But yeah. Aren't you supposed to trade yen in the evening at night? So the way I trade yen pairs, just to get back to trading, is so this all comes. So this is my process, okay? When is it lowest? When at what time of day, what time of night is it lowest? Generally speaking, my entry on the yen pairs should be about here, right? That's a low for the today. And that's about 6 a.m. my time. For New York, that's about 2 a.m. None of us is awake at that. Okay, maybe midnight actually. None of us is awake at that time. So what I generally should have done if I had internet, I would have had a limit order there. Placed on about that candle. That would be like 10 p.m., which would be your 10, 6, 2 p.m. or something. So 4 p.m. Your 4 p.m. New York 4 p.m. That's when I place the limit order for whenever price comes down. Generally, it would be about your 8 p.m. But it was midnight. So somewhere around there. That's what I do every single time I look for a new strategy or to adapt anything in my strategy is when is the low? At what time of day? So this is evening, this is your afternoon. When did this drop happen? Okay, it's about London it's around London. All right, okay. So in an uptrend, when is the low? That's midnight. That's about 6 a.m. That's about your midnight. So when does the natural pullbacks happens? And they generally happen around between New York 4 p.m. and midnight. And I don't know when every single time. So I would argue, yes, I should be trading yen pairs. And yes, it is the actual entry on the yen pairs. It's around your 4 p.m. to midnight. But I can't really tell when it happens because that's what the market does, what the market does. Secondly, why wouldn't it come lower? Would you trade it then? Not really. I think that is good enough support and resistance for me. We can probably think about that one, but I don't like the deep pullback on it, to be honest with you. So something in that direction would have been my plan yesterday. Now, micro here or a whole new brand new higher high, higher low, to be honest with you. You shouldn't be buying, you're just random Moss guy. The other thing is, and this probably is where I come in, right? Because I offered to talk to you guys for free for 1 hour, right? And I really love those conversations. I really love those. Like, I really love those conversations. The reason why, because you guys are so humble and you tell me what you're struggling with. And I honestly believe, I hope and pray that I can make a difference in your trading, right? Because when I go through strategy, when I go through histories of trading, and I'm not joking, I'm not trying to be bad, I'm not trying to have an anecdote. I've literally seen traders say, that's a good sell. And my question then is, and it hits stop loss. And I'm like, okay, great. That was your reactions. Okay. How many times have you done this? I don't know. Okay, cool. The next sell opportunity, the person that I saw someone saying that they would sell here. And I'm like, well, I always say, and it's always going to be my say, is when does it start, the trend? Be at the beginning, wherever the beginning is. And if you are late, like I am now on this one, you probably should have tried that many times and find out, okay, at the beginning of the trade, you have the potential at least to make, let's say, 130 pips, say 100, whatever it happens, right? You sell up there at the beginning of a trend, of a downtrend, even though this is an uptrend or range or whatever it is. Okay, we try that, and then you find out, okay, sometimes it actually does go higher. And then the problem that people then start to do and say, this doesn't work because 1 or 2 or 3 times it went against you, because you probably, okay, sometimes it's just, okay, it didn't work. That's part of the variations in your strategy. But then that makes you distraught. That makes you change. That makes you question. That makes you do things differently. So for me right now, to try to come back to reality here, I can say I want to buy that. It's a bit late now, bruv, but all right. Okay. So what do you do now then? I can't say there for tomorrow morning for London Open. That's still a bit 20 pips too late or so, or too high. That still makes me very vulnerable for the 90 pip drop, potentially at least. And to me, we are at resistance. And what I've seen lately, and I'm not going to say that for too long, but what I've seen lately is support and resistance placements. Sometimes some makes it look like this. And then my question to you, which line are we using? Which level are we using? And I just mentioned, or so I just showed kind of subconsciously this. Beginning of the trend, start of the trend, or end of the trend for that matter, no matter how you look at it, that's always going to bounce if we're going to be at range. That's always. And then you can say, okay, we're already trying to touch it here. Okay. I don't know if I'm going to do that though. But at always, beginning of trends is always going to be the resistance. And it can come back like a month later and still react to it. And then this bullish and this, I would argue, and we had a meeting on support and resistance, and this basically is the pinnacle of how I would say, where do you put your stop loss, where do you put your support and resistance? And I see traders every now and then say that is a good resistance level. We're going to continue lower from here, like this, and I say, are you sure? Have you tested this? Have you tried this? Are you sure that we are just going to do that? Because in this case, for this current, that's the same level. And it doesn't always, for a long time, at least in my experience, hold. It's kind of like where I was caught at the end of the trend, and it starts to pull back. When you have those end of trend pullbacks, like 100% retracement of the previous move, meaning when we have, as we say, that's bullish for that matter. Can I find another one? Yeah, okay, fine. This is good enough for me. When we start having, also for that matter here, some would say that's a good level. And I say, okay, you have 100% of that move. That's dead. Here as well, you have almost 100%. It's still. The only thing you're lacking here is a brand new higher high. And then it is completely dead. When you have 100% pullback on the previous move in the downtrend or an uptrend for that matter, then also you've already lost. You have already lost in my book, because that's where it's supposed to be selling from, up here. And that never happened. So what do you do with situations that never happens? We never got an entry. We never got an entry. You never got an entry. Leave it alone. Don't chase it. Because if you start trying to sell down here, what happens? What happens? Messy. Stop losses. Back to break even. It touches the same level many times, and then you start freaking out and like, but you trailed it. If you sold here, you trailed it, comes back up again, takes you out, and then it continues on. I have a lot of conversation with those who trailed. Nothing wrong with trailing, Nick, but it doesn't fit everyone. So Maxi, eyeball up. Thank you, buddy. So yeah, we can catch gold. Yeah, Maxi was just Maxi texting me. I can text him later or after today because you're here. Yeah, gold. Somebody asked earlier, can we go down to 3,500 or 3,550? Right now, what kind of everyone who understands gold is for holding value of your assets, not for short-term gain, but that's the basis, right? In that situation, you want to buy 3650. Yeah, maybe not. Okay, then what about it dropping then? The only problem about dropping from this parabolic move higher, opposite. Okay, it's mirrored. Is that if it goes up hard, it falls hard. So if it starts dropping, my experience is if it starts dropping, it drops hard. What could make it drop hard? Maybe the Fed on Wednesday comes out and says, well, we don't think we're going to need a lot of rate cuts. We're going to cut now once and then leave it. If that is somewhere the tone of Powell, then whatever made this rise, whatever the reason and the idea for why it rose goes away. Because it's not only the rate cut for September, it's also the rate cut for December and going into next year. So just have that in mind. But I would argue the only way to do gold is sorry, that was not the one. Back down here at 3,280. Never bought it. But now I would have to wait. I don't know. Same as Nick. Well, we know, but we also know that the risk at the moment is high. High for what? Any direction. Both ways. Both high, both higher and lower. Because whoever bought down here at 3,280 will start taking profit soon. What happens to price when people start taking profit? Even though it starts going higher and continues higher, now you're going to catch a falling knife, okay? But then I again want us to be at the beginning of the trend, not the end of the trend. There's a drop coming after we finish the last wave 5, which will just be a corrective, not a drop. Yeah, and I'm still gold bullish, and I've been that for quite some time, given the dollar cutting. But yeah, that's kind of me. And then we have some seasonality taking it higher. But then when my brain goes into what is tactical to do, what is the best use of your money in 2025, at what time of year, what time of day, what time of month, and at a high, it generally has not been profitable for me to continue buying. Even though this looks like now it's a high, but it actually was halfway and it went much higher, doesn't matter. Try to catch a high, and that's the high, you're going to suffer a lot of losses. And I try to avoid losses like the plague every single day. So yeah, New Zealand yen, I just want to say, okay, so again, I wanted to come. So my theory for yen pairs was down to today and then higher. That didn't happen. That puts this in a more vulnerable move. We have come a bit lower. I don't know if it's good enough. And also, we are falling a bit. So, can you fall more? I hope so. I would love so. But yeah, down to 87.5. We'll look into that today or tomorrow. If we bounce, that would be great. So any of the end pairs having pullbacks for tomorrow with London Open, I'll post as fast as I can when those trades get triggered. At the end of the day, I really want to help you if you are struggling with trading. So if you're on Discord, please click the free 60-minute meeting, and I'll see you there. Until next time, boom. Don't do anything I don't want to do.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello everyone and welcome to my segment of the stream. So let me check if everything is working well. Okay, switch the microphone source to the Shure one, so it should be working. So yeah, welcome to my segment of the stream. If you have any questions, you can let me know in the comment section. So I do have my comment section open on the side. And let me also see if the screen is working well. So yeah, we should be doing good. So what has been happening in terms of news for today, we don't have much. So we pretty much have nothing in terms of the red folder news. But this week is going to be pretty busy. So last week, our key data releases were PPI and CPI. What was the conclusion for inflation? Well, if we check the CPI for the US, you can see that the inflation is rising. So inflation in the United States is actually going higher, although PPI is kind of softer. CPI is still well above the 2% target, and it is currently at 2.9%, and it is in an uptrend. So inflation is rising. Now, for this week, we have 4 interest rate decisions. So 4 central bank interest rate events. First, we have Canada. So we have on Wednesday, Canada and the United States. We have the Fed, which is going to be really, really important. I would say the highlight of this week is going to be the Fed interest rate decision. And then we also have the UK on Thursday, and we have Japan on Friday, potentially. So it's tentative, meaning it is still not 100% certain if there will be an event or not. So this can change, but we can also see an interest rate decision from the Bank of Japan. So if we go through the rates for Bank of Canada, it is forecasted that they will cut interest rates. For the US, it is also forecasted that we will have an interest rate cut, which we can also check out in the Fed Watch tool. As you can see, 17th of September, pretty much 100% chance that they will cut interest rates. People have a question, will they cut by 25 basis points or 50? I say 25. I really don't think they're going to cut by 50 basis points. So we have 3 rate cuts priced in for 2025. And I don't think we will have a 50 basis point rate cut anywhere in 2025. I think we will have 3 rate cuts of 25 basis points. So that is also what is priced in the Fed Watch tool. So that is for the Fed, again, a cut. For the UK, we do have a forecast that they will hold the interest rate the same. So the UK is in major problems, as well as Canada. So Canada and the UK are facing some very bad economic numbers. They are the two biggest, you can say, fiscal sinners. So they have bad GDP, rising unemployment, inflation in the UK is rising. In Canada, it is kind of around 2%. So for the UK, you have pretty much a forecast that there will be no change. For the Bank of Japan, we do have a forecast that they will not change the rate. But if you have been following the news, if you have been following financial juice, you would have seen that they are open, or the Bank of Japan is open to possibly hiking the interest rate, raising the interest rates, which is bullish for the yen. Will it happen? Will it happen this week? I don't think so. Will it happen by the end of the year? It is highly possible. So it's a big possibility. No one knows for sure, but it is possible that they will hike interest rates for the yen. So for example, if you want to go short USD yen, it may be an interesting trade if we do break this support level. That is one of my trade ideas, and I do have an alert set if we do break those lows. So let me see the comments. Okay, let's see. Hey, Slugmeister. And okay, we don't have any requests so far. It's a bit of a slower day today, so no news, no major catalyst for market movement. I am still in free trades, so I'm in euro dollar buy, I'm in euro GBP buy as well around break even, and USD CAD buy, which is running also around the break even mark. So what I wanted to go through was essentially my watch list for the fundamental strategy, or for the strategy that is based on the daily chart and that heavily includes fundamentals as a confluence to take a specific setup. So the first thing I have on the watch list is, of course, the US stock market, NASDAQ, so a US indice. I'm focusing on the NASDAQ because the S&P is good, so it is pretty bullish, but I think NASDAQ has more room to push to the upside because of artificial intelligence, because of technology companies which have been the best performers in the last couple of decades. So yeah, I'm betting on them the most. Gold, you want to see gold? Okay. CAD Swiss, yeah, sure, no worries. We're going to cover the requests. So for the NASDAQ, looks like we are continuing higher. Looks like we are still at the all-time highs. So continuing to break them and just exploding to the upside. I don't want to buy here. I think we are overextended. I think we could see a pullback, and I don't want to buy when the price is so far away from, let's say, the 20 MA, and when it has been going up for such a long time. So I'm looking for a pullback. I'm looking at this level of support around, let's say, 22, or you can say 2300. And I would buy if we do hit this level. So that would be my first level where I would get in for the NASDAQ. Pretty simple. I've been talking about this for a couple of weeks now. I've been talking about this ever since we broke out of this level, I would say, and we just never got a big enough pullback for me to get in on a buy trade. Now, the next one is going to be gold and silver. Gold and silver, I'm very bullish on. So I really like gold and silver. I think right now the best assets to trade. So the best assets to trade is going to be gold and silver. Absolutely. What is the reason? Well, you're getting inflation in the United States. You're getting NFP that is slowing down. So if we go to labor, NFP, and if you check out the downtrend, so the jobs market in the United States, which is very, very important as an indicator of the health of the US economy, this is going lower. This is in a steady downtrend. Also, quick plug for the Edge Finder. If you do want to get this software, you can use my discount code, which is MARKO. So if you do want to get the edge finder, if you do want to get an extra edge in the markets, definitely do check out the edge finder and use my code, which is MARKO. Inflation, NFP, we can check out the GDP for the United States. It is okay, it is positive. But again, the main issue is, and we can check out inflation that I showed you, which is rising. CPI inflation is definitely in this sort of an uptrend. So all of the factors that we have, and also rate cuts, which will happen, it's like 100% certain that rate cuts will happen. So rate cuts are bearish for the US dollar. Rate cuts also signal more inflation. So when you get rate cuts, usually inflation goes up. Now, to protect against inflation, investors buy gold and they buy silver. Pretty much every single indicator, every single data release is pointing to a bullish gold and bullish silver. So my favorite assets right now, definitely these two. I'm looking for buy setups. So I'm definitely looking for buy setups. And I would like to see gold reach this level of support. Okay, so gold to reach this level of support around 3,500. I think that's a pretty good psychological level. It's a round number. It's a significant area where we could see a bounce. And for silver, I want to see it hit, let's say, 39.6. So I think 39.6 is a good area of support. And right now, the price does look a bit overextended on both metals. Pretty much same thing as the NASDAQ. Looking overextended, but long-term I'm bullish, and I'm actively looking for buy setups, actively looking to get in. I just don't want to buy all-time highs. I don't want to buy after this explosion, because I do think a pullback is very likely. The 20 MA is a nice indicator that you can use to tell you when the markets could be overextended. So if the price is very far away from the 20 MA, like it is right here, then that tells you that the pullback is very likely. You can check out the prior price action. You can see when gold has had this sort of an explosion. And over time, it definitely goes back to the 20 MA, gives you the pullback, gives you the opportunity to get in. So that's why I like using the 20 MA. It's a good indicator of, let's say, dynamic support and resistance, and also to show me when the price is overextended. Okay, so let's see. Do you think gold will hit 4K this year? Let's see. I think 4K is a bit stretched, but we do still have October, November, December. So I would say we can hit 3,800. I think that's a good target to have for the end of the year. 4K it's pretty high. So that would be a gain from the current price of 9%. Well, it could happen. Definitely could happen with the current environment. The current market environment is extremely bullish for gold. And this environment could last for a couple of months, especially if the Fed decides to keep cutting interest rates. So if it has 3 rate cuts in 2025 and then continues to cut the interest rate in 2026, gold could hit those levels. So I would say, actually, by looking at it and by thinking about all of the fundamentals and by looking at the current market environment, 4K could happen in the next few months. Okay, so CAD Swiss, CAD, CHF. So for the CAD, I'm really bearish. I'm really bearish on the CAD. Let me just quickly show you the data. So a couple of data points that you can see on the Edge Finder. If we go to Canada, you can see only 25%. Only 25% of data is coming out bullish. So very bearish reading here. If we go to the GDP for the CAD, what do you see? Well, you see pretty much negative GDP and sort of stagnating growth. If you go to the unemployment, this is by far the worst reading. So if you put in the CAD, you can see rising, so rising unemployment rate. See, definitely rising unemployment rate. So 1 year ago, or let's say from January 2024, unemployment was 5.75. Now it is 7.1. That is a huge rising unemployment number, and that is very, very bad. The final thing is, of course, inflation, and inflation is below target. Okay, so the inflation is below target, below the 2%, but it's close. So it's close. So there's not a whole lot of room to cut interest rates. That's why for the CAD, I'm really bearish on the CAD. Also, I do have a USD CAD long, which is currently around break even. This is a signal in the A1 Discord. So if you do want to join the A1 Discord, and if you do want to get all of these signals, you can again use my discount code, which is MARKO, and get yourself a nice discount. Again, I share my trade signals. I share everything I'm looking at. I give you a daily forecast. And also, with the daily forecast, I also do fundamental analysis for any crucial event. So this week, I have my hands full because we have 4 central bank decisions. That means a lot of new fundamental data. So all of the updates I put into the Discord. Yeah, we talked about CAD Swiss. So I'm bearish for the Swiss. I haven't done a lot of work on the Swiss, which is something I need to do, but this chart is definitely in a downtrend. So let's also check the top setups page here for CAD Swiss. Bearish. So the edge finder is getting a bearish reading, which is good as well. I would be a seller. So I would be a seller in this market. We also, as far as I can see, on Friday, the 5th of September, we broke out of this key level of support, which is nice. To be honest, I would actively look for sell setups. I'm in USD CAD long, so I'm not that interested in shorting CAD Swiss. But if I wasn't in USD CAD long, I probably would be looking at going short on the CAD Swiss. Let me check also the swaps. So one thing that can kill you with a Forex trade is swaps, negative swaps. So if we check the CAD Swiss, let's see, just let's wait a bit for it to load. Until it loads, check the comments. US 30. Well, for the US indices, I pretty much have the same opinion. So I have the same opinion. NASDAQ, S&P, then we have US 30, so Dow Jones, Russell. Okay, for the Russell, rate cuts benefit Russell the most. Since small companies or smaller companies, they are not that profitable. You have a lot of companies that are losing money. And when rate cuts happen, loans get very cheap. Money gets cheap. So the unprofitable companies take out a lot of loans, artificially inflate their stock price, and Russell benefits from that. So the Russell is, I would say, the most bullish story for rate cuts. I still prefer the NASDAQ, but going for buy setups on the Russell is a smart thing to do. But in my opinion, we are overextended on all of the indices, especially the S&P and the NASDAQ. So pretty much on every single indice, I'm looking at a bit of a correction. I'm looking at a bit of a pullback before I look for buy setups. Yes, long term I'm bearish, but for the very short term, I think a pullback would be pretty healthy, and it would give me a nice reward to risk opportunity to get in on some lower levels, right? That's the game plan for me. Let's see the carry trade. Yeah, so we had CAD Swiss buy. So, okay, so you're paying negative swaps if you do sell CAD Swiss, but it's not a big difference in the, it actually is quite a big difference in the interest rate. So the swaps would be pretty high with this trade. Now, what I like about my USD CAD setup is I'm getting positive swaps. Okay, so I'm getting paid by being in this trade. If you check out USD CAD, see here, buy. If you buy, you get paid positive swaps. So that's nice. That's why I prefer, if you're very short on the CAD, I prefer going long USD CAD than going short CAD Swiss. Okay. So USD ZAR. That is something I don't really look at, but I can tell you that we have broken this level of support, so we're looking kind of bearish. Does the top setups page have USD ZAR? I'm not sure. ZAR, yeah, it does. So let's see, it's probably a neutral reading right here. Yeah, for this one, I can just tell you about the technical analysis since I don't know much about this. Give me just 1 second. Okay, I'm back. So technical analysis for this one, it is looking bearish. So it is looking bearish, but the fundamentals I'm not that sure about. So I don't really have a clear reading for this one. Casino says, are you still looking to buy metals on pullback? Yes, absolutely. Might be a 50 basis points cut. I don't think so. I think it will be 25. It'll be pretty crazy for the Fed to switch from no cuts and a lot of concerns about inflation to a 50 basis point cut. I think that is too drastic. I think that's too aggressive. And I just don't think it will happen. DXY held the 97.1. So for the DXY, if you're wondering what my forecast is, my forecast for the dollar index is a bit more downside, which is reflected in my euro dollar buy. I have a take profit set at this level, but I don't think we're gonna go drastically lower. So I think the 96.4 level is very strong support, and I think that level holds. Okay, so I think the 96.4 level holds a lot, or holds with a lot of strength. And if we even reach that level, I think we bounce and we range around. That's my forecast for the DXY. Why not 50 EMA or 200 EMA? Because they are too big. So the 20 EMA is fast, and it gives you sort of a nice quick indication on the daily chart, at least, if the price is overextended. It's just my personal preference. There is no right or wrong answer when it comes to moving averages. It is what suits you the most, okay? What is best for your trading, what is best for your strategy. Be careful around FOMC. If DXY holds this area, FOMC could possibly push the dollar. Yeah, so a lot of investors or a lot of traders, especially retail traders, are super short on the dollar, and that is usually a sign that you want to go long. So you want to do the exact opposite of the retail traders, because 95% of the time retail traders are caught on the wrong side of a trade. So if everyone online is saying to go short on the dollar, well, it may be a time to be neutral or maybe even go long. So yeah, definitely be careful with the dollar and what everyone is thinking the dollar will do. Euro dollar retracement, then go up, maybe, but I do have a take profit set. I want to get out. As I mentioned, I do think dollar goes down a little bit, but not a lot. I don't think we will get a drastic sell-off in the dollar, so I want to get out of this trade if it wants to hit the take profit. Okay. And I want to take this time to also tell you about the sponsor of the A1 show, which is DNA Funded. So if you're looking to extend your trading capital, so if you want to get funded, DNA Funded is a very, very good prop firm to pick a challenge. What I personally go with is a two-phase. That's my favorite, the 100K size. Okay. And if you use our discount code just for this live stream, which is A1 Live, so that is the discount code, you get 25% off. So if you use the code for this stream A1 Live, you get 25% off a challenge. And again, 100K two-phase, but that is if you are a advanced trader. If you're just starting out, if you're not sure what your trading edge is, if you have not backtested your strategy, if you have not live tested your strategy, then definitely don't get into a funded challenge or pick a smaller one. But if you have a proven trading edge, a proven strategy, check out the 100K account and use our discount code. There should be, so you have the discount codes in the description. And if you want to learn more, you can click the first link in the description of the live stream to talk with a support agent. Okay, so let's see. We have a couple more minutes. Gold seasonality is coming up. So gold seasonality, we can take a look at gold seasonality monthly. Well, kind of. It's positive for September. So it's negative for October, but it is positive for September. It's not a huge number like in August, or let's say in April. April is huge, or January. January is definitely a huge bullish seasonality occurrence. What do you consider a large positive or negative swap? That's a good question. So as far as swaps go, a huge swap, for example, my Euro GBP trade, I'm paying a lot of swaps. You can check this in your broker. Go to MetaTrader statistics with a specific currency pair, and in there you will see what are the swaps. So Euro GBP has very high swaps if you are buying. USD yen has huge swaps if you're selling. If you're selling USD yen, you'll be paying a huge amount of swaps. Okay, some of the pairs that have negative swaps but that are not that high is euro dollar. So if we go to the carry trade, euro dollar, let's check it out. Yeah, so you're paying negative swaps, but it's not that much. It's not a big number with euro dollar. So it depends. It very much depends. A great chart that will help you is this one, the carry trade scanner. Let's see. UK keeping interest rates. Yeah, looks like they are keeping the interest rates. Marco, the retail are short euro dollar, so they are long the dollar. Okay, so looks like I'm gonna have to look into that. But just from the sentiment I'm getting online, so just from the things I'm seeing on the internet, people are calling for a weaker dollar. So that's at least what I've been seeing in the last few weeks, and in some of the discords that I am part of, let's say. Again, if retail people are mostly short, you want to go long. If retail folks are mostly long, you want to go short. You want to do the exact opposite. I will check out the numbers. We do have those numbers in the Edge Finder, but I am running out of time. So that's about it. Here's my watch list. I'm in free trades. I'm actively looking to buy silver, gold, and the NASDAQ. If you have more questions, I will be live streaming tomorrow on the A1 show, so you can catch me tomorrow. And definitely do check out DNA Funded and use our discount code. Okay, so I can go a bit longer for, let's say, 5 more minutes just to finish up my my train of thoughts. So let's see. I wanted to go through the comments. Okay, let's see. What I wanted to touch on is so Steph says, can this be applied to a smaller time frame? And if so, how small of a time frame can it be done with 5 minutes? I'm not sure what you're talking about. If you're referring to the 20 EMA, I can talk about that, but I'm not sure if you're referring to the 20 EMA. So let me know in the comments if that is what you mean. Put to call ratio on gold and SPX, so we can take a look at that. It is not something that I take a look at very often. So it should be here, put to call ratio. Let's see. For the SPX, it's kind of neutral. So it's kind of neutral for gold. Let's see for gold. Definitely extreme fear. That is pretty weird that we have extreme fear. So this actually tells you to buy gold. And for the dollar, do we have to do euro? Do we have? Okay, we don't have the dollar here. Let's see, retail sentiment, history. Euro dollar. Okay. Okay, so looks like they are kind of bearish, but it is kind of climbing higher, so they are possibly starting to become a bit bullish. So I'll have to do some more analysis on the retail sentiment. Compared to the US index, the DAX is not overvalued. Are you interested in the DAX? No, personally, I'm definitely not interested in the DAX. Let's see. The reason is it looks super flat, super range bound. So fundamentals, if we go to the top setups, DAX, so the German stock market index, neutral, while the technicals are just super flat. So for me to become bullish on the DAX, I would need to see a breakout of the highs and then a nice uptrend. Okay, so I would need to see a breakout out of this resistance level, and then I would be looking for buy setups. Right now, I'm super patient. I don't want to get in. I already took 2 losses inside of this range, and I don't want to get chopped around again. Okay, let's see. Gold is blasting off. So it's positive on the day, very close to all-time highs, and definitely exploding higher. The whole strategy. Okay, so you're referring to the whole strategy. For the 5-minute, no, I would say it cannot be applied to the 5-minute. I don't think that is possible. Again, fundamentals, they take a lot of time to play out. It takes a lot of time to assemble a story. And on the 5-minute, you just have too much noise. So the 5-minute is heavily impacted by big orders in the markets, noise, geopolitical events, let's say crazy breaking news, crazy tweets from Trump, some, let's say rearranging of a order book from a bank. So a bank heavily buying, and then for 5 minutes you get an explosion in gold, but it doesn't really reflect the overall fundamentals. So for the 5-minute, I think you need a different strategy. Fundamentals just don't have a huge impact on the 5-minute. What I do know works trading on the lower time frames is trading breaking news. So if you're trading live NFP, CPI, PPI, interest rate decisions, so you can trade central bank events. I know the top guy on Darwinex, for example, he trades central bank events. Okay, so he is probably going to be trading the BOC rate statement. He's definitely going to be trading the Fed. He's going to be trading the Bank of England and the Bank of Japan if it happens this week. So for the 5-minute, you need a completely different edge to be profitable. How low can you go? I would say maybe the 4-hour chart with this strategy. I would definitely not do the 1-hour chart. I think the 1-hour chart is too low. For the fundamentals to play out, the daily chart is optimal, in my personal opinion. So the daily chart gives you enough time to assemble a story, to paint a picture. And for example, if you look at the CAD, so Canada economy, Canadian economy, you look at all of the different data points and you're trying to spot a trend. So we looked at the GDP for the CAD. We said the trend is kind of flat or even negative. So the GDP is looking really bad. We looked at the unemployment for the CAD. Definite uptrend. So a big problem. And this took months to assemble. This took months to happen. For inflation, it is below target, but also pretty close to the 2%. So not the best number, right? And then you look at house prices. Housing prices in Canada, if you look at the last 5 years, you're going to see house price in Canada actually are going lower. So they're in a downtrend, which is a sign of a slowing economy, which is a sign of slowing demand, which is a sign that basically demand for houses in Canada is slowing, and that will be reflected in the Canadian dollar sooner or later. Hey Yoshi, what's up? You're a bit late. So we will be finishing up the stream here. You can catch me tomorrow. As I mentioned, we're going to be continuing the analysis. Do we have a important event tomorrow on Tuesday? We do. We have some numbers coming out, but Wednesday is going to be the most important day in September. So 17th of September will be the most important, the most volatile day. Definitely join the stream. If you want to join the A1 Discord as well, I told you can use my discount code. We post all of the updates concerning technicals, concerning fundamentals, concerning the edge finders. So you get deep analysis of events and you get trade signals, or you get trade ideas based on our analysis. So it's not just me, it is Nick, it is iWind, it is Chris Pulver, and a lot of other very good traders. So that's it from me. Good luck with trading and see you tomorrow on the stream.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.